if you were an investor looking at retail real estate, for example, and you were trying to focus on an aspect of a company that would make it likely to do better than its peers, would you look more at location? Would it be cost of capital and kind of just pure economies of scale? Would it be balance sheet? Would it be any of the above? What would you say?
Yeah, I would say it would be all of the above, Andrew. And, I don't like looking at one metric. I mean, we do spend a lot of time, for example, interviewing management teams. I have a podcast later this afternoon with the CEO of one of the companies we cover. So we do like to speak with management. But I think that there's two things that I would say, that we look at the hardest. And if there were just two that I had to rely on, it would be, and you touched on both of them, the cost of capital, which again is a competitive advantage, and especially in the real estate space. I never really understood that as much when I was a developer. I had access to capital, but I didn't go compete head on with REITs. I bought a couple shopping centers from some REITs when they were looking to recycle. I bought one in Chester, South Carolina, and another one up near you in Raleigh. They were both owned by REITs. But I got a pretty good deal, but they were ready to unload those. I didn't understand the cost of capital. We look at these REITs and they really have cost of capital. And so it's important to have that investment grade rating. Companies like Federal Realty, which has an A, they're one of the few, I think, A-rated REITs. And so their cost of capital is really attractive, certainly on the debt side. And obviously, as the share price improves, the equity side as well. So they can transact very accretively. So, and I think, and that ties right into their scale advantage that you pointed out as well, just being more efficient and creates, scale is great for a couple of reasons. One is it certainly diversifies the risk of the tenants. You don't want to have exposure to too many, all your tenants at one time, all these rent checks coming in. So I think that, and also provides that geographic diversification as well. There are hurricanes, there are events that cause risks to certain markets. Certainly the West Coast and the political environment we see on the West Coast is a risk. And then some of these REITs are able to expand into Europe, and they have not only that diversification advantage, some of their assets or properties in Europe, but they also have a cost of capital advantage at the same time. This is one thing people don't recognize a lot when companies like Vici Properties or Realty Income. Vici's not in Europe yet. They're going to be probably at some point. But look at Realty Income, how they've expanded in Europe, and now they have much lower cost of debt they're able to obtain in Europe than they can in the U.S. Plus, they're diversifying. So it's kind of a 2-for-1 kind of situation. So I think scale advantage, cost of capital advantage, those are the more dominant names. The companies like Realty Income or Simon Properties or Ventas, or you look at Vici would be another example, who have this dominance and will continue to grow. They're only doing it because they have those two moats. They have that scale, they have that cost of capital, and they're able to continue to grow and grow. Now, I'll leave you one more fact here is REITs today own roughly 10% of all U.S. institutionally held property. That's a very generalized number. But the reason I want to point that out is there aren't many other asset classes where there is so much opportunity to scale, and the opportunity set for REITs is substantial, where you have 90% of, so when you drive home today or you're driving out to the grocery store today, just think about 1 out of 10 of these buildings, whether it's a warehouse or a fast food chain, are owned by REITs. So there's a lot more potential for REITs to continue to absorb the privately owned real estate that is in the marketplace. And I think that's a really big, important thing that people miss, to see that this is not the, mature business model. There's a lot of runway left for REITs over the next several decades.